The following is a market update that is summarizing and debriefing the American Fund's presentation on August 27th. We have heard from Christina Page, who has detailed how global investment opportunities persist despite the fact that excessive media interpretation of the market is sensationalized, maybe mostly for its dramatic effect to keep us tuned in and paying attention to ads rather than the key objective in providing and performing key information in the market. She has discussed how global growth and U.S. economy has had moderate GDP. In our presentation, we have demonstrated that we have had a slow return of inflation in and around 2%. Despite pockets of inflation, real estate markets like San Francisco, we definitely don't have wage inflation, dramatic CPIW inflation, and we don't have commodity inflation, as well as other signs that may indicate we are in the late stages of the economic cycle. We are seeing that the Fed policy is normalizing in the expectation that rates will rise, at least based on the pricing of the bond market. Feds published expectations in 2015. The yield curve continues to be steep and flattening, which is a typical advance indicator of market pullbacks or recessions. We are having continued double-digit gains in the stock market. We are seeing after the most recent quarter of corporate results that over 70% of firms are in or exceeding expectations. We are finding that the warmer weather has allowed the market to prosper within the stock space more strongly, and we are seeing balance of height and volatility, at least in the most two recent pullbacks in August and April. We have seen that the market has been resilient and bouncing back, that the demand for equities is greater than that of bonds in a long-term sense. Yields rise over the long term and stocks are presenting a better long-term growth potential. In short-term periods, we expect that form bonds in the next 3 to 5 year longer range. If you have specific planning and recommendation needs, you should speak with Jacques directly. This presentation is intended for the clients of Jacques, and in no way does Jacques intend to represent his business partner, LPL Financial. Q&A. First question. Jacques, we have had a concern from you that the markets are volatile and there is a good chance of correction in the next 18 months. What is your current perspective? Response. We have seen, as we have just discussed, that the economic data is supporting more of a mature market economic phase as opposed to the aging late phase portion of the cycle where we expect to have a peak performance. We are also seeing that a lot of signs for a time of harvest. We have historically had 5 key indicators that have consistently stood the test of time. The possibility that a transition is overheating and the coming late stage is upon us. We are having, with the exception of one key valuation indicator, very strong and positive market valuation fundamentals, technical and sentimental indications. Question 2. What do you see as a key risk at this time? Response. A rapid rise of interest rates, creating an inflection point in which markets are very volatile. However, the indication is that we will have an orderly transition, and albeit that there may be greater volatility in the stock and bond market, we are expecting that a well-diversified portfolio should be able to produce decent income and returns in the coming months. Obviously, individual concerns will require portfolios to be adjusted accordingly. We invite you to reach out to us for a meeting to discuss your specific concerns.